Welcome to the Miami Condo Minute. I'm Peter Zalewski. I'm a condo consultant. I'm also the founder of the Miami Condo Investing Club. Check out the website, miamicondo.club. If you give me a minute, I'll give you some valuable information about the South Florida condo market. What are we talking about today? We're talking about Jay Powell. We're talking about the Federal Reserve. We're talking about interest rates. And probably most importantly, if you are in the condo game in South Florida, we're talking about 2025 and where mortgage rates are headed. As you know, if the Federal Reserve Open Market Committee cuts rates, it makes money cheaper to borrow and more readily available in theory. If the Federal Reserve raises rates, it's more expensive to borrow and might be a little bit more difficult to obtain financing. That's important to keep in mind. So what did Jay Powell do today? Well, the chairman, along with the Federal Reserve Open Market Committee members, made the decision to cut interest rates by 25 basis points or 1/4%. That takes the federal funds rate, which is the overnight interest rate that is charged to banks to borrow money, down to 4.5%. Back in September, the rates were coming in at 5.5%. So you can see we've shaved 1 percentage point or 100 basis points off of the federal funds rate since Labor Day. Expectations were, up until today's meeting and the subsequent press conference that featured Jay Powell, that the U.S. economy was on its way to a soft landing and inflation was under control. Experts had predicted that we would probably have 4 more rate cuts in 2025. Now, after the rate cut announcement and the press conference, we have come to learn that we're probably only looking at 2 interest rate cuts in 2025 because inflation remains stubbornly high. The Fed's stated goal is to keep inflation at or below 2%. Right now, inflation stands at 2.7% and is rising. This means the Fed still has more work to do. As a result of that, the stock market reacted in a negative way. One headline from CNN said Dow plunges by more than 1,100 points after Fed projects fewer rate cuts next year. Another headline from the Financial Times said the Federal Reserve cuts interest rates, but the hawkish forecast hits stocks and sends dollar jumping. As many of us may know, South Florida condo prices are at some of the highest levels they've been in at least 14 years. Because condo prices are so expensive. Interest rates are critical. When interest rates are high, people have to come up with more cash, and it's going to cost more money to finance one of these condos. The federal funds rate impacts anything and everything related to interest rates. But really the best way to measure mortgage rates is the 10-year Treasury note. At the time that we're recording this, the 10-year Treasury was priced at about 4.52%. Why is that important? Well, a real simplistic, back-of-the-napkin approach to try to figure out what mortgage rates are is to add 3 points to whatever the 10-year Treasury is. So if the 10-year Treasury is coming in at 4.5%, and it's up today as a result of Jay Powell's announcement, that means we're looking at roughly 7.5% mortgage rates. That's just to give you some perspective. So if you look at the condos, which have a very high price tag, and then you factor in the current mortgage rates, it seems as if we might have some challenging times ahead in 2025. South Florida is already facing a slowing condo market where inventory is rising and buyer transactions are falling. You're probably thinking, I thought that everybody wanted to move to South Florida. I thought everybody was buying a condo. This was a place where they wanted to be when they could work from home and enjoy the weather. Well, that actually existed for roughly about 2 years or so between 2021 and 2022. What we've seen since then as a result of a series of rate increases by Jay Powell and the Federal Reserve is that the housing market froze up in July of 2023 when the federal funds rate hit 5.5%. Interest rates were stuck there for roughly 14 months. In September 2024, we had a 50 basis point interest rate cut. We had another 25 basis point cut in November 2024, and then today's 25 basis point cut in December 2024. Now we're sitting at 4.5%. If the latest projections are correct, there's only 2 more rate cuts coming in 2025. That would get us down to about 4% or so, which means mortgage rates might be stuck around 7% for the foreseeable future. This is the Miami Condo Minute. I'm Peter Zalewski. I'm a condo consultant. I'm also the founder of the Miami Condo Investing Club. Check out our website, miamicondo.club. Please note The audio is AI generated based on the voice and writing of Peter Zalewski.